see behind me that it's just after noon here in Calgary at our head offices in Calgary. This afternoon, I'm going to run through our presentation, and the main purpose of this presentation is really to go through the financials that we just put out a couple of days ago, walk you through the first quarter. I'm also going to give an update on the Ottawa exploration program, and then the third part of the program is I'll address some questions around current production and where we're at and where we think that's going to go. So hopefully those are the three things that I'll answer. Following the presentation here, I'll then open up the floor to some questions as well. So look forward to that. Start out with just a little bit of a legally, obviously we're going to be doing some projections in here as well as pricing and some other things. So just take that as you can. Always some of those are not as perfect in this kind of world as we'd like them to be. Nothing has changed in the overall business strategy. We really still have the two main models, which is what I'll call the scalable economic growth, or really our development program. And I know over the last couple of months I've been talking about, we want to get that program going again and get it fired up again. And I'm going to specifically address why we keep pushing that out a little bit as I go through the program. The second part will be the exploration upside, which is Ottawa, which has really been our main focus for the last couple of months internally. Happy to say that that's moving forward. And the real value creation from us comes from a combination of both of those, the low risk development oil drilling, and then the higher risk exploration opportunities that have now come from this concept stage to where we're actually licensed and going to be at that program in the next little while. To do that, I want to talk specifically about the financials from the first quarter. It was really a very good first quarter for us. The key thing to look at when you're looking at these numbers is we made the decision to switch from reporting in Canadian dollars to reporting in US dollars. So the numbers that you see here are all in US except where indicated in Canadian. And the reason for doing that is we found that with most of our liquidity now migrating away from Canada and really our peer groups all reporting in US dollars, it made a lot more sense to be able to compare us on a US dollar basis. Plus, from our point of view, the Trinidad and Tobago dollar is tied very closely to the US dollar. So from a practicality point, it's probably a better currency for us to report in. And it should stop me from having to do the old Canadian dollar to US dollar to pound conversion in my head and hopefully make it a little simpler for everybody. But what you can see in the first 3 months of the year, we really outstripped our petroleum sales of about $11 million versus $8 million the previous year. And that's even when you think about January pricing was quite low. So we saw that dip in November, December, January. So we really only had 2 months of what I'll call this 2019 price recovery that we've seen. Average crude production about 2,100 barrels a day. We obviously had a strong first quarter on the production, but the thing to keep in mind is a big piece of that production is very large wells that James and his team have drilled in the last little while. We're starting to drill some of these deeper prospects into these new fault blocks. So what we're seeing is fewer wells contributing on a much higher individual basis. And what that does for us is it lowers royalties, it lowers operating costs, does all those sorts of things. The downside is when one of those goes down, it really moves your production around. And I'll talk about that as we go forward. Operating netbacks, even though our top line pricing on a per barrel basis was less than it was last year, we were able to increase our operating netbacks on a per barrel basis. The funds flow at 2.4 million US, up from 2 million last year, so a 20% increase in the funds flow. Small loss. Part of that loss is attributable to just the fact that our deferred income taxes have been driven up, and that's really a result of us being more active in chewing through our tax pools more quickly. Capital expenditures. We really didn't spend any money in the first quarter, and that was the plan. The plan was to focus on Ottawa, focus on making sure that we had everything in place, making sure we have the cash to do that program, and really, really fine-tune that. So very, very little capital expenditures in the first quarter. The rest is pretty well self-explanatory. Common shares outstanding went up from last year as a result of the equity issue we did, which will fund the Ottawa program. Cash at $7.5 million, so obviously well funded on what we're doing there, as well as $2.5 million in cash flow in the first quarter. We have a surplus, so you can see we went from a deficit to a surplus. Part of that was the equity raise, but part of that obviously was the generation of cash. And the term facility is at $15 million. The key thing about that term facility in Q1 for us is, again, as I've told everybody, and Crown Capital continues to do that, is we ended up pushing out the first repayment of that again out till 2021. So that's it's kind of a revolver as we go along there and go forward. Obviously, a very good relationship on that front. This is something that we're obviously proud of. This is something that we get generated by our broker on a monthly basis. Really what you can see is, and we like to benchmark ourselves against our peer group of how the TXP stock is done versus our AIM peer group and AIM overall. And certainly we're happy with that. Been a little bit of a dip in the last day or two, but not very significant. So move on to the balanced approach for our value creation. And that's really the two sides of the equation. That's our development program on the west side of the island, and then our exploration program on the east side of the island. One of the things I'd like to talk about today is where we're at and why that development program keeps getting sort of pushed out a little bit. I know I've had some criticism from people saying that, well, you said you were going to start it in May, and then you said you were going to start it in the summer, and it looks like it's getting pushed out again. That is absolutely correct. That is factually correct. Unfortunately, there's two things going on. Is number one, we've seen some volatility in oil price again. So the key thing for us this year is to get the Oryx wells drilled. So we want to make sure that we don't get offside and sort of overcommit ourselves on the development program, and then we have to jeopardize the exploration program. That's number one. Number two is, the change that took place with Petrotrin last fall that I've been on record of saying as being very positive. It continues to be very positive. The management of Petrotrin has really put in place a new partnership model. They want us to take a look at longer-term prospects on our individual blocks that we have with them. They want to talk about how we can work together to increase recovery factors. They want to talk about how we can maybe accelerate the programs that we have in place. So as a result of that, discussions going on, and again, all very positive. What we've been doing is we've been holding off a little bit on the development drilling program, partly because of that, just to make sure that we can incorporate and as we move forward in sort of this new partnership model. And quite frankly, we're hopeful that we can expand that partnership model. So we want to make sure that as we go forward and when we get into this new program, it becomes a continuous program. And in a perfect world, what we'd like to do is once we get going, start with one rig and then wrap that up to 2 rigs and just have a continuous drilling program going. On the exploration side, very large land base again that we've got out there. We've got these prospects identified. Now, I'll talk about that a little bit more. Talk a little bit about this production. I think it's probably the one thing that came out of what we had that was a disappointment in that release a couple of days ago. We averaged about 2,100, and then we got the April sales numbers we got on about May the 12th. So a couple of days later, we let the market know, and that is our approach. We will give you good news and we will give you bad news. But it's pretty simple. We had 2 very large wells that needed routine. One of them needed a routine workover, just basically pull the pump out of the hole. The well was pumping up the tubing and flowing up the casing. The pump seized up on us. We went in to do a pump change. We've done hundreds of these over the last couple of years. And on our way out of the hole, we ended up getting stuck. We think it's a result of a bunch of sand that came in one day when the well produced a very significant volume of oil. So it was something around 400 barrels a day. And anyway, we pulled on it and we parted the tubing and the rods, and then we weren't able to get back in there. We spent about 3 weeks trying to get that fixed. We were unsuccessful in doing that for 2 reasons. Number one, the rig that we had wasn't configured properly to do the job, and 2, the fishing tools that we needed to get the tubing and the casing, or the tubing and the rods out of the hole, weren't available to us. So what we decided to do instead was move that rig off the location and move it on to some other wells. That's put us way behind in the workovers, and obviously that well was contributing at times over a couple hundred barrels a day. So that's simply the reason for the decline. The good news is over the last couple of weeks, we've now been able to get some of the base wells back up onto production, and we've now found the fishing tools. And as I mentioned in the release, we think over the next 4 to 6 weeks, we'll have everything back over a couple thousand barrels a day. And when we're back there, we will also let you know. If we run into troubles on that, we will also let you know. But it looks pretty routine to us, what we have. We're not sure that it wasn't some sort of tubing failure or something that went on there, but we'll know after we get everything out of the hole. That's a long-winded explanation, but unfortunately, two things that looked very routine ended up causing us a bunch of hardship. The second part is the payout on these wells. You can see now that we're averaging about 90 barrels a day as our initial rates on these things, and at current prices, we're talking about just over a year of payout. This is something that has been, I think, really exciting for us in the heritage negotiations. They're seeing the economics that we're generating and how quickly we can increase production on the island. So they really want to work with us and hopefully expand our arrangements that we have with them. Number of wells drilled, and this is quite interesting. We were talking about this internally today. You know, this is last year. If you look at this year, there actually hasn't been any wells drilled on the island yet. And the reason for that is we're all kind of in that same holding pattern with Heritage, where what we want to do is make sure that we've got this new joint ventures in place as we move forward. You know, and I really want to emphasize that there's really no downside to this. The upside is that there's a new fresh look at this partnership, which is really refreshing and I think really exciting, especially for Trinidad, because it's going to mean that they're going to have a significant increase in oil production over the next 3 to 5 years. Talk about the exploration blocks. What we've now sort of transitioned from, and it's probably the last time you're going to hear us talk about this, is the prospect we've been talking about is Corazon. It's now been officially named Coho. We are in the field actually building that lease. And we had talked about a spud there in early June, I think in my last presentation. It looks like that's going to be to the middle to the end of June now. And the reason is really simple. The rig that we want to use on that particular well is going to drill a well to the north of us. It's probably going to take 30 to 45 days, more likely going to be in the 30 range. And we'll get it after that. The advantage to that is that rig will come in hot. It's going to have drilled a well. The crews will be all lined up. Any of the equipment issues that they've got will be taken care of. It's also much closer to the block than where we had to move it from before. So we said to the drilling crew, just drill the well and then we'll get to our well when we're I got to emphasize to people, 2 weeks in the overall scheme of what we're talking at Oireachtas is just not significant. This prize is a prize where if we're right in here, we're setting up a 5 to 10 year drilling program. So we want to make sure that we've got the front end of this right. One technical issue here, 1 second. So as far as what we're looking at doing at Coho, just to refresh anybody's that hasn't seen this before, we're really twinning an old gas well that tested about 8 million cubic feet a day. We think with the new seismic that we have, we're going to be able to move up structure and basically twin it. We also think there's another thrust sheet down below it that we now see, so we're going to be able to test that as well. So there'll be some that I'll call almost a development side of this, but there's also an exploration side. Really exciting, very close to an existing gas plant operated by Shell that has tons of excess capacity in it. But to give you an idea, you know, today we're producing, today we're 1,800, but let's say that when we get things back up, it'll be 2,000. To give you an idea, when you look at this, this is something that really could increase production by 50% from one single well over the next 6 or 7 months. So kind of gives you the idea of the magnitude of what we're talking about. Then the next well that we're going to drill is a little bit further to the east, and it's in the same formation, but it's conceptually different in that what it is it's a well that actually produced oil back in the 1960s. It produced about 27,000 barrels. And with what we know today, what we want to do is we want to go in there again. We're going to move up structure a little bit, but what we're really looking for is that underlying thrust sheet again. So we're going to take that well deeper and evaluate the underlying thrust sheet. Give you an idea, again, on what we're looking at in this particular area is we're looking at structures that, you know, if we're successful, you know, you've probably got 10 to 15 wells, additional wells to drill on them as we go forward. So it's, you know, it's exploratory, but again, we're offsetting a well that's already produced 27,000 barrels. So we think with, you know, technology's changed a little since 1958 till now. Hopefully the rocks haven't, and I'm sure they haven't. we feel again that this is a fairly low risk play for us. Sorry, jumping back around on you there. And then the final, the next one is the well that really got us kicked out of here. It's a prospect that's now been called Royston, and it's a well that was drilled by Shell back in 1965. And at that time, they didn't see any hydrocarbon. But what we now know as a result of other wells that have been drilled in the area, one of them in particular that was drilled at Carapel Ridge, tested about 100 million cubic feet a day of gas. This looks very similar to that well. So what we'll be doing is, once we're done these first two wells, we have to bring in a different rig to drill this because it's a little bit deeper, but we're hoping to drill that right at the tail end of this year, or probably even over into next year. Once those are all evaluated, what it really does is it sets up a development drilling program. And when you take a look at the independent engineering report that was done on all of this, really, and you add it up, you know, this is something that transitions Touchstone from being a couple thousand barrel a day company to where, with some luck on the exploration side over the next 3 or 4 years, you know, you're something north of 5,000 BOEs a day on the island in what we want to do. To summarize it, what we've got is we drilled the 11 wells last year. Once we get this new framework put in place with Heritage, which again I'm really excited about, sort of the attitude change that's gone on there. We think there'll be many more wells to drill over the next 2 or 3 years. On the exploration side, you know, James and I have talked about this. We've kind of gone from this excited side to now nervous because we're actually doing stuff in the field, and we're now going to actually drill the well. So it'll be, you know, it's time to find out what happens. And then when you see the value creation, you can start to see the ramp up in shareholder value through the sales that we have. You know, firming up on oil prices, I think we're north of $71 again this morning on Brent. So we're pretty excited about that. One thing I haven't mentioned, and I should mention, is we did in the subsequent to the last quarter, we locked in a floor on 800 barrels a day at just north of $56 a barrel. And really, we look at that as an insurance policy and really to protect our exploration program for this year. So that's the Q1 results. That's the program, and probably a long-winded explanation for the change in the production from the Q1 average to where we're at today. And so I'm going to start now, and I'll take some questions. Let me start out by saying there was some that were sent in advance here. So let me go to those. Can you give us a flavor of the potential upside you see at Ottawa? You know, I get asked this question a lot, and it's sort of binary in a lot of cases. Like, for instance, on Royston, you know, we either have 700 feet of hydrocarbon pay there that would look a lot like Carapel Ridge, which is, you know, 50, 60, 70 million cubic feet a day plus liquids. Or for some reason that gas is migrated through there, and you know, it looks like it's gas on logs, but it's actually water for some reason. You know, it's really that kind of binary point in here, and it's either going to be fantastic or it isn't. That's the Royston prospect. I think on the Cascadura, which is the oil prospect, and the subsequent prospect to the south, those are two that are really interesting because they've already produced hydrocarbon. We know in the logs that they had oil while they were drilling it in the 50s. So really what we're going to do is the question of success in those is going to be, what is the producing rates? And we think that they will have significant rates, you know, call it up to 400 barrels a day on a given well in there. But that's unstimulated. And when you look at most of these types of reservoirs around the world, in that particular type of deposition need to be fracked. So that's one thing that we might look at doing. You know, if we end up with a lower rate oil well, we could end up doing it. But if we're right, the resource is huge. It's hundreds of millions of barrels in each one of those structures. So it really is pretty significant. The smallest prospect we're drilling out there is the Coho well, the first well we're going to drill. A lot of people have said, well, why would you drill that first? It's really twofold. One is we want to make sure that the rig and the equipment and everything is set up to make sure that we can do it. And I guess three things. Two, it's already tested hydrocarbon. and 3, it's very close to the tie-in point with the Shell plant, so we can then convert it from production to cash and just prove the concept up. So if I sound excited about Orthwa, I am. The chances of all 4 of these being successful is probably low. Some of it is exploration. But then there's a whole other step to this. That's just drilling, offsetting the wells that were drilled in the 50s and 60s by Shell. There's a whole bunch of other anomalies on this block that would be pure exploration. And if we can prove up this model, this turbidite model, it really sets up an entire fairway across our block that we could then go back, shoot some additional seismic, and drill some of these other anomalies. So you can really see why this is a step change for us as we go forward. How long will it take to drill each well at Orthwa? The first well, Coho, is probably going to be about 35 days from spud to rig release. Call it 5 or 10 days on the front end for setup and teardown. And then the one over at Cascadura will be about the same. Royston will be significantly longer. It's probably going to be 45 to 60 days. And part of the reason for that is it's deeper and it's just a bigger rig. So it's just going to take a little while longer for us to do it. We also may run some tests as we go through that prospect. So, this program is just going to continue to roll out as we go forward. Other question, can you give us a flavor, how easy will it be to add production to Orthwa if drilling is successful? And that's part of the reason why we've done them in this order. Is the first one will be the gas well. It's very close, about 3.5 kilometers from Shell, so we should be able to tie that in. Our best estimate is, let's say, 6 months. I think we might be able to do it quicker than that, but I think we want to do a lot of testing on these wells. We want to make sure the reservoir size is what we think it is. So there'll be probably a 90-day period from rig release to when we actually start to design facilities and make sure what we have. So on the gas side, that one's that particular manner. Second one would be on the oil prospect at Cascadura. That one will be fairly quick. James always kind of pokes me in the ribs here when I say this, but really it's blowing the holes in the pipe, and if we've got oil and maybe it might require a pump, then what we do is just pump it into tanks and we can truck it away from there while we build a pipeline. So that one's probably months from coming on production. The Royston one is really the one that's interesting. It's 13 kilometers to the Shell plant, but I guess from my point of view, I think if we're right on that one, it's going to be a bigger well than Shell has capacity. They've got capacity for roughly 30 million a day of gas right now. So, what we might have to look at doing is either expanding the Shell facility or look at some other mechanism. But, that's a good problem to have to deal with, that one. I'm not going to worry about in what we do. But again, remember, what we're talking about is these are individual wells into prospects. Any of them that are successful would have multiple follow-ups, including even Coho, which we've already identified 3 follow-ups. So I hope that answers the question. I think it's going to be fairly easy to add some production, certainly in the first part of 2020. You previously said that you had paused additional development, drilling new wells because of the oil price. Now that Brent is near 70 again, is this still the case? Yeah, these wells make a ton of economic sense at $70, but the second part of that, and I hope I'm not dancing around too much on that, but we really do want to see what opportunities we have with Heritage, so then we can prioritize when we get the development drilling program going again, where is the best place, not only for us, but the best place for them to move forward with the drilling program. So we're working hand in hand. Timing on that, I think realistically now, we're still, I think it's going to get pushed out a couple months. We're hoping for June, but truthfully, it's probably going to be the end of the summer before we start looking at that seriously again. And with the 2 wells going down at Orthwa, I really want the team to stay focused on that as we move forward. Is PS 605 in production and FR 1800 or 1801 on pump now? PS 605 is one of the other problematic wells. We had a water zone at the bottom that we produced for a while, and then we ran a packer in the hole, and we perforated the uphole zone, and it was doing great. It was actually, it said in there we averaged 55 barrels in the first quarter, but it really came on late in the quarters. The actual rate was significantly higher than that. And then one day the field guys found that they ended up with a bunch of rubber in the U-joints at the surface, and what we've now determined is that the packer let go, and the well basically got pushed out, went from an oil well to a water well, and because the lower zone has more pressure than the upper zone, so what we need to do is go back in there and run that packer and a new packer and reset it. Unfortunately, the drilling rig that was doing the fishing job was the only rig that was available to go in and run the packer, so we haven't been able to get to that yet. But again, that's something that now that we're getting caught up, probably in the next 10 days to 2 weeks, that one will get taken care of on that point of view. FR 1800 and 1801, no, 1801 is still flowing actually. I have to look at the sheet today. I think it's about 150 or 160 barrels a day. We've opened up the beam size. It's up to about a 10-30 seconds beam at this point, and it's, touch wood, it is an absolutely terrific well, and it's been going well. And FR 1800, I think it's right on the production curve. I'd have to look at that one again, but it is on pump, and it's going to be in that range of 50 to 60 barrels a day after having been on for 6 months. So, but that 1801, touch wood, is it's spectacular. So we're continuing to work on that. I think those are pretty specific questions, but I hopefully gave you specific answers. April production is off. Can you explain why? And is this going to be a recurring problem? This obviously came in before the presentation. Is it going to be a recurring problem? You know, with the big wells that we now have, one of the risks is when they go down, we do see these material changes in the production. What I can tell you is that we've got a really good handle on the production, and you know, we kind of do everything we can. As the field guys are saying, it's a little bit of a perfect storm. You know, we should doing a routine pump change. We get stuck in a hole. Then the rig's left there for 3 weeks, so it can't get to some of the other work. Quite frankly, we brought in a coiled tubing unit, which is something we use continually on the island. The compressor went down on the coiled tubing unit, so it's been out of service and probably will be out of service for another 3 or 4 weeks. So we've lost almost a month and a half on that. So it's just one of those things when something starts to go wrong, you have to do it. In fairness to the team, they made the decision, hey, let's just take a breather, let's just walk away from this, let's get the right equipment, put the right plan in place, get the rest of the base production back up, and then we'll go back and deal with the issues of the 2 big wells. So that's what we're starting to do now. So is it going to be a reoccurring problem? The answer will be no, but we always have some wells that aren't producing as we go forward. But the one thing I can tell you is this is a mechanical issue. This is not a reservoir issue. When do you think the company will become a self-sustaining and not need to raise money again? You know, I think if we were to just do the development program, we're getting very close to that now. I mean, you could see that we would have drilled, you know, basically 3 wells in the first quarter out of the cash flow of the $2.5 million. The real wild card on here is going to be what we have to do with on the exploration side of things. Once we drill Coho, and once we drill Cascadura, and then move over to Royston, it's really going to talk about a development plan. Having said that, it's much easier to borrow money, find partners, do those kind of things on a development program than it is on the exploration program. So I guess the answer to that is that on the development side, we're getting very close, but with the exploration component. But when you see the numbers we're talking about, it's not really dilution. It's really a matter of accelerating the program, and the returns are really significant at where it costs. So, yeah, our choice not to do. But the other side of the equation too, on the debt side, is we don't want to go over 1.5 times debt to cash flow. And if you look at the last quarter, end of the year, we were at about 1.8, which is not where we wanted to be. And if you look at the end of the first quarter, we're back down to that 1 to 1.1 times debt to cash flow. So that's kind of important for me. Next question: what's your year exit production target level? You know, we're still shooting for 2,500 barrels a day. We think that that's very doable without any additions from the exploration program. Now that is caveated on the fact that we get back in the field with the development drilling program, probably starting, you know, late in the summer in what we want to do. So that's where we want to be on that. That has not changed at all. In your podcast, the end of April, I was sort of talking that we were around 2,000 and spudding was going to begin in June. I think I touched on that. You know, as soon as we got the sales numbers, and we really try not to sort of make announcements on production because there can be some big variances based on inventory. As soon as we found out what the April numbers were, although that wasn't good news, we delivered it to the market as quickly as we could. And yes, we did talk about drilling the Oratois well in early June, and that looks like it's going to be pushed by a couple of weeks. But I really don't think that's significant when we look at the advantages of waiting a couple of weeks and getting the rig kind of tuned up and on site. So I just don't see that as being behind schedule in the overall scheme of things. Have you considered horizontal wells, and where there are large net oil pay as far as feet go? We've actually looked at it for a couple of years, looking at the horizontal wells. And I think what's more likely going to happen is you're going to get some of these deep angle or steep angle wells. The beds in Trinidad are really steeply dipping. So if you actually go completely horizontal, you'll drill right out of the formation. That's one of the things that we've looked at. So that one we're kind of interested in looking at. We think that the other thing is that you know, you get a lot of reservoir exposure when you perforate these wells. And like going horizontal, the idea is that you should see more of the reservoir. And when you look at, you know, let's say we get 300 feet of vertical pay, if you went horizontal 300 feet and stayed in the reservoir, you'd still have 300 feet of horizontal pay. Like the pay is the same whether you're on the lateral or whether you're on the vertical. So it's an interesting discussion. I know some of our competitors down there have looked at that, and we'll be certainly watching that closely. The other issue is, of course, the technology of doing that. Just using, not a lot of the rigs have top drives on them, and it'd sure be nice to have a top drive unit on it for going forward. But something we've looked at. I think what's more important is if you look at the last 11 wells that we drilled, you know, we drilled them into new fault blocks. We put good engineering, good geology into them. And actually, I think that's going to get us better rate of return than some of the high angle horizontal wells that are talked about. But I'm not ruling it out. I think it's just one that might need a little bit of science to it. How has the relationship with the new oil company Heritage been following the transaction? I think I touched on that a little bit, but a couple of other highlights that I think talks about this new relationship. You know, we look at the differentials. We're as high as 15 or 16% with the old Petrotrin, and you know they've been as low as 7.5% since Heritage has taken over. You know, we used to get paid about, call it 45 days after the end of the month. We've actually been paid in under 30 days in March. Talk about that. Talk about getting some of the approvals. That's probably been a little slower than we saw before, but that's quite frankly because they didn't have the personnel. What we're now seeing is those are starting to come along. And the other thing that I think is really exciting with Heritage is they're now talking about a reservoir management plan. So not just looking at individual wells, but actually looking at how we develop these reservoirs over 20 years. How do we get more production out at the beginning? And you know, one of the obvious things in getting production out faster at the beginning is give us more incentive. You know, give us more incentive whether that be lower rates or more acreage or whatever the case is. You know, is there a way to change that relationship to encourage long-term reservoir management with short-term production? And that's now the attitude that they have, which is, you know, something that we've been kind of pounding on the table for a while. So I think that's really positive. Lines of communication are great. We've had, you know, we had a 3.5-hour technical meeting with their technical group last week, running through everything we had done and what our plans were. And you know, I can tell you we used to have quarterly meetings, but they were just sort of scratched the surface on stuff. And this was the first real technical meeting that we've exchanged a bunch of technical information. So again, if you can't hear it in my voice, very excited about that new relationship with Heritage. I think it's going to be great for all the producers on the island. It's also going to be great for the country. It's something that needed to happen. How much will the 15 workovers add to production? So we try to do we try to do, this is the workovers. I think that what's alluding to it is that we had 15 wells that were waiting add-ons. It varies from well to well, but it's probably in the order of about 20 barrels a day per well, 18 to 20 barrels a day per well. So you take a look at that, that's easily 300 barrels. That kind of takes you back to that 2,000 barrel range, which is exactly what we're looking. Now, some of those might be lower, and obviously that doesn't include the fishing job, which was, quite frankly, our second best well in the fleet. So we need to get that one back on production. And they're just continually going. And those will be operating costs, not capital costs. So we'll see those move forward. What plans does the company have to manage and pay down its debt? You know, this is maybe something that we philosophically talk about. You know, the debt for us is, we think it's proper to have a little bit of debt on the balance sheet, you know, as opposed to doing a big whack of equity, diluting the shareholders just to take out the debt. So our view is, we think that if you can be around 1 to 1.25 times debt to cash flow, we think that's manageable at an 8% cost of capital. That's much cheaper than anything we would do on the equity side of things. We think if you put the right precautions in place so you can protect the downside, like we've done with the 800 barrels a day at the $56, we think you got low operating costs, low decline assets. I don't ever think you'll actually see where we don't have a little bit of debt on the balance sheet. I know some people say that was against what they would like to do, but I just don't think it makes sense for us to go out and issue, you know, $15 million of equity a day to pay down the debt. It just, it doesn't make any sense to me. I don't think it's a good use of capital. We got time for one more question. What's my personal, that's a great question. What is your personal vision? Not that the other questions weren't great, but what is your personal vision of where TXP could be in 2 years' time? So what do I see TXP looking like in 2 years' time? I think, number one, I think we could be a strategic partner for Heritage on developing their onshore assets through this new relationship. You know, we talked about wanting to be the largest share producer onshore, and I think there's a real opportunity for us to build on this relationship with Heritage. So that's number one. Number two, with some success out in Ottawa, and you know, we're really trying to focus some on the gas side. There's some tax reasons why we want to focus on gas. There's no SPT on natural gas, so the netbacks are much higher. You know, it's a great fuel for other things that go on the island. You know, I think that some success that we have at Ottawa, we really could see a multi-year program going in 2 years' time. So 2 years' time, in a perfect world, I'd love to see us have 2 wells running on a continuous drilling program on the west side of the island, probably 1 rig on a continuous drilling program on the Ottawa block, following up on either one of the oil discoveries or the gas discoveries. We're going to have a seismic program that we're going to be working at that point, hopefully to find other structures on Ottawa as we move forward. And that, you know, that would be the ideal situation. You think about that, you know, we're looking at something that's, you know, generating, instead of you know, 2,000 barrels a day, we're hopefully into that category where we've now got a vision to get through 10,000 barrels a day. And I just don't see that being a big reach with some of the opportunities that we have in front of us. So that's the vision as to where we're looking. We're not looking anywhere else off the island. I'd love it if the government would come through and make some fiscal changes. I don't believe they can do that politically right now with what's going on there. I think they may be able to deal with it later in 2020 after the next election, and they get a strong mandate to do so. So we're working with them on that. So that's kind of a rambling answer as to where we'd be. It would be a development of our exploration program, this new relationship with Heritage. I think it's super exciting, and if I didn't add in that it'd be really nice if oil was around $80 or $85, that'd be great as well. So anyway, that's would be that's where we're at. Again, you know, thanks very much for your time listening through the update today. I know the release earlier this week had some you know, I'll call it unfortunate news in it, but our policy here, and my policy, is good news or bad news, we'll get it to you in a timely manner, and that's what we have to do. So the next time you'll probably hear from us will be middle to the end of June. Hopefully we'll have that production back up, and we'll also be hopefully spudded the first well at Coho and have a better plan on when we're going to start the development drilling. So with that, I'll leave it. And again, thank you very much for your time and questions this afternoon. Take care.